CNBC-TV18 conducted a poll to get a sense of what lies ahead for the markets in 2022. We posted 5 top questions and got some rather interesting responses. We polled nearly around 40 market participants that included fund managers, smart HNIs, as well as institutional sales heads as well. First up, the first question that we put was, what is the view on equities for the next 1 year? Now, nearly 90% believe that we'll get returns in excess of around 5 to around 10% out. They believe that that's on the cards, with nearly 50% of the respondents believing that it could easily be more than 10% returns. Now, keep in mind, Nifty is on a 6 calendar year winning streak, so 2022 will be an interesting one. Next up, which are the sectors to bet on in 2022? Now, consensus seems to go that financials as well as capital goods, well, they are the top sectors. Remember, the banking space, well, it underperformed in 2021. I say that because the Nifty Bank was up only around 13% odd. That compares with the 24% return that you got on the Nifty itself. Near 50% of the respondents, they are betting on the tech pack doing an encore. Now, another question that we put forth was, which segment of the market will outperform? Well, most of our respondents suggested that the large caps, they could bring home the big mullah in 2022. While there was little lower conviction on small caps, having a solid year in 2022. Now, equities, well, we also asked customers, asked our respondents, what about asset allocation? Well, most believe that equities, they deserve a large part of the money flows in terms of asset allocation. We have seen a revival, remember, in real estate in 2021, particularly the latter half of it. And respondents, well, they seem to suggest there is more juice in store. As they suggested that nearly around 10 to around 25% allocation should be out here. Our respondents, they also went on to state that precious metals, they could lose their sheen, at least in terms of investor preference. This as consensus suggested that the asset should have less than 10% exposure in terms of asset allocation. Debt, well, this seems to be having lower preference, but what really caught investors' imagination is the crypto world, as respondents believe that this is the way forward, though as we have seen in the past year, it's not the space for the faint-hearted. Before we wind up, we need to put on board where investors see risk. Well, most believe that higher inflation will push the US Fed to take a more hawkish stance, and the hike in interest rates is likely to be another threat for the markets. The second largest risk that's perceived is the global supply chain disruption.